Tech is moving so fast right now that even professional investors struggle to keep up. And it is very easy for normal viewers to feel lost or follow hype without really understanding what they're rebuying. In TI's video, I want to slow things down and walk you through two very different companies in a calm, simple way. One sits in the biotech world, helping scientists understand individual human cells. The other is trying to solve a huge bottleneck inside AI data centers by moving data faster with special optical hardware. One is more mature and steady. The other is early stage and burning cash while chasing a very large opportunity. I'm not here to tell you what to buy. I'm here to explain what these businesses do, what their recent numbers look like, and what kind of risks they carry, so that you can think for yourself and avoid blind decisions. Before we go any further, I need to make something very clear. This video is for informational and educational purposes only. I am not a financial advisor, and nothing I say should be taken as personal financial advice or as a buy or sell recommendation. Always do your own research and, if necessary, speak with a licensed financial advisor in your own country before investing real money. The information I'm talking about comes from publicly available company updates, press releases, and investor reports, but numbers can change over time. So please double-check the latest data if you're watching this later. My goal is to explain things in simple English so that viewers in the UK, US, Australia, Europe, or anywhere else can follow along without needing a finance degree. Let's start with the first company, Cytek Biosciences, ticker symbol CTKB. Cytek is a biotech tools company. That means it doesn't make medicines directly for patients. Instead, it makes advanced instruments and reagents that scientists use in the lab to study cells. If a researcher wants to understand how immune cells react to a virus, or how cancer cells respond to a potential new treatment, they need very specialized machines to analyze those cells one by one. CTKB systems are designed to read a lot of information from each cell, using a technology often called spectral or full spectrum flow cytometry. In simple terms, their machines help turn complex cell behavior into measurable data, which is incredibly valuable for drug discovery and medical research. Now, let's talk about what's been happening in Cytek's recent results based on the information we're using. In the third quarter of 2025, Cytek reported revenue of about $52.3 million, which was around 2% higher than the same quarter a year earlier. That's not explosive growth, but it is positive and steady. Sales were stronger in the United States and in the Asia-Pacific region, while Europe remained softer. Under the surface, however, there are some pressures. Gross profit was roughly $27.6 million, and gross margins slipped from about 56% down to roughly 53%. After adjusting for things like stock-based compensation and amortization related to acquisitions, the margin still declined from around 60% to about 55%. In simple words, costs have been creeping up faster than revenue, so each dollar of sales is now producing a little less profit than before. At the same time, total operating expenses rose to about $36.7 million, up around 10% year over year. Research and development spending actually went down a bit, and sales and marketing also fell slightly. But general and administrative costs went up sharply, mainly because of litigation and one-time charges that pushed the company from a small profit last year to a loss from operations of about $9.2 million, and a net loss of around $5.5 million, versus a small net income in the same quarter last year. The good news is that Cytek is not running on fumes. Cash and marketable securities are still strong at roughly $261.7 million, which is about flat compared with the previous quarter. That level of cash gives the company breathing room to keep expanding, to support its products in the market, and to keep investing in new technology, even while short-term profit is under pressure. The company also reaffirmed its full-year 2025 revenue guidance in the range of about $196 to $205 million, which implies growth somewhere between slightly negative and slightly positive. So if we step back and summarize the Cytek story right now, is one of stability and innovation, a real established business with recognized products and a growing global footprint, but also short-term profitability. Pressure, softer demand in Europe, and margins that investors need to watch carefully. It can be interesting from an educational point of view if you want to study a more mature, tools-based biotech company that is real and operating. but not necessarily a fast growth rocket. Now let's switch to something completely different. POET Technologies, ticker symbol POET. While Cytek is focused on helping scientists in the lab, POET is focused on AI data centers and high-speed data movement. As AI models get bigger and more powerful, they don't just need fast chips, they also need very fast connections between those chips, servers, and racks. That's where optical engines and photonic technology come in. POET's aim is to build optical engines and related components using its optical interposer platform, which combines light-based photonic components and electronic components in a compact, efficient design. These optical engines are designed to support speeds in the 800 gigabit to 1.6 terabit range, which are exactly the kind of speeds modern AI data centers are starting to need. You can think of POET as a company trying to create the super-fast highways inside AI infrastructure, so that data can move quickly and efficiently between different parts of the system. Over the past year or so, POET has announced several developments that show how it is trying to move from pure R&D towards real commercial activity. The company announced an oversubscribed capital raise, bringing in a large amount of fresh funding, which increased its cash position significantly and gave it more runway to invest in development and scaling. It also announced a separate investment aimed specifically at accelerating its AI connectivity solutions. On top of that, POET received a production order of around $5 million for its 800G optical engines. That's important because it's not just a test or a demo. It's a real order for production units, which suggests that at least one customer believes in the technology enough to start using it in real systems. The company has also received industry awards and recognition at major optical communication events, which doesn't guarantee success, but does help with credibility and visibility within the industry. Financially, however, POET is in a very different place from such. In the 3 months ending June 30th, 2025, revenue was in the hundreds of thousands of dollars, up from almost nothing in the previous quarter. That shows early commercial movement, but it is still tiny compared with the size of the market the company is targeting. At the same time, net loss for the quarter was over $17 million, significantly higher than in the same period a year before. Operating expenses also increased as the company spent more on development and operations. Basic loss per share widened compared with the prior year. This pattern, small revenue, large losses, is typical of an earlier high-growth tech company that is still building its products and market, but it is also very risky. The fresh funding and investments provide cash to continue for now, but that money comes from issuing new shares, which dilutes existing shareholders. If POET needs more funds in the future and has to raise again, that could mean further dilution. There is also the usual execution risk. Having promising technology is one thing, scaling manufacturing, winning large repeated orders, and defending a position in a highly competitive and fast-moving AI hardware market is another. So if we put the two companies side by side, the contrast becomes clear. Cytek is a more mature biotech tools business with tens of millions in quarterly revenue, real products installed in labs worldwide, and a strong cash balance. It has shown profits in the past, but is now dealing with margin pressure, higher costs, and a recent move back into loss. The growth is modest, but the underlying business is real and operating. POET, on the other hand, is a high-risk, high-potential player in the AI infrastructure world. It is targeting a multi-billion-dollar market in optical interconnects and has some exciting elements like industry recognition, partnerships, and a real production order, along with a stronger cash position after recent raises. But its revenue is still very small, and it is burning a lot of cash, relying on investors to fund its journey. For an investor, Cytek feels more like a steady tools and services learning case, while POET feels more like a speculative bet where the upside could be large if things go right, but where the risk of disappointment and volatility is also very high. To close this video, I want to repeat the most important point. This is not financial advice, and I am not telling you to buy or sell either of these stocks. My goal is to help you understand in simple language what these companies do and what their recent numbers suggest so that you are better prepared to think independently and avoid emotional decisions based on headlines like stock to buy now. If you are considering any investment, please double-check the latest figures. Think carefully about your own risk tolerance, your time horizon, and your financial situation. And if you're unsure, Speak with a licensed financial advisor in your country, whether that's the UK, the US, Australia, or anywhere in Europe. If you found this explanation clear and helpful, I'd really appreciate it. If you like this video, share it with a friend who is interested in tech and investing, and subscribe to channel for more educational breakdowns like this. And in the comments, let me know. Do you personally prefer more stable tools-based companies like Cytek? Or are you more attracted to high-risk, high-reward AI plays like poet? Thanks for watching. Take care, and I'll see you in the next video.